Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Monday, the 20th of May, Bull versus Bear webinar. Steve Mider here on the Call for Trade Day. Welcome, everyone. We're going to go for our usual Monday run through, which is a little different to the usual run through, in that we'll look at what I like to call the shape of the week to see how the markets could shape up this week. Yes, we're day trading at trade day, but we can get an idea of where the volatility points might be. We get an idea of whether the first half or the second half of the week is going to be more or less volatile, and therefore maybe narrower ranges, and therefore you might adjust your trading strategy slightly depending on that. So just to highlight, the macro watch was out yesterday. So this is like the recap and outlook for what's happened and what's ahead. So the main headlines here, but I'll run through them, actually the weekly recap and outlook. So let's just run through those really. So global stock indices were hit record levels, not just in the US and Europe as well. Some Asian stock indices as well, after the better than expected US CPI data. That was obviously the main focus. And in all of that, we've seen potential for rate cuts to maybe more solidifying the chances of rate cuts. Basically, we didn't see a big push into a lower yield environment, but short end kind of reflecting maybe more certainty that Fed are going to go at least twice by the end of the year, with an outside chance of more than three rate cuts coming up. So all of that, but probably still looking for now September for the first rate cut. And going into this week, the key data we're going to watch in here. So stocks were up, bond markets did go slightly to lower yields. Certainly in the US, to a lesser extent in Europe. The US dollar index sold off with lower US yields, so making the US dollar less attractive. So the dollar was weaker. Gold futures were up with the weaker dollar, so with the inverse relationship there. Gold futures up again today. Friday, where they were close to the record high, they made a new record high this morning after the potential for Middle East tensions, given the death in a helicopter crash of the Iranian president, and oil futures mostly in consolidation mode with an upside bias, and that helicopter crash also, and the death of the Iranian president potentially also going to put the potential upside for oil. On the central bank side, going into this week, where do we have the focus? Well, we've already had the PBOC. In here we get RBA meeting minutes on Tuesday, and the RBNZ decision Tuesday through into Wednesday. The spotlight really though on the Fed minutes, and we get lots of Fed speakers throughout this week as well, and plenty today. They're going to be the main focus today. So the Fed meeting minutes are the main focus on Wednesday. On the data side, the macro data, it's relatively light in here. If we run through, really the standout is probably the UK inflation report to some extent in here. We do get Canadian CPI, just to maybe a hint to see how global inflation is going. On the US side, it's fairly light, and we do get US durable goods orders at the end of the week. And then really the global data is probably the standout of the week, which is the flash PMI data from S&P Global. So the flash PMI data for global economies in here is probably the standout piece of data coming up on Thursday this week with the Fed meeting minutes. And then the other thing in here, which we mentioned in the macro watch and go into a bit more detail there, we get Nvidia as well on Wednesday. So we're watching out for that. So Wednesday, we get both Fed and Nvidia. So certainly watching out for those. If we go to today, you can see there's basically nothing on the cards apart from Fed speakers. Bostic is Bostic, Bar, Waller, messed up Bostic again. And then overnight in here, we get the RBA meeting minutes. That's actually on Tuesday in Australia. So late tonight in the US. So, a lot of Fed speakers, no data. It's a really light day, but the Fed speakers could put a little bit of a spin on this. Underlying theme, obviously, clearly relatively bullish, pretty bullish in here overall. Just a quick look on the headlines in here. So the Iranian president forum is doing helicopter crash. He's grabbing the headlines on the overnights in here. Not a massive impact, but it is seeing as I say, gold going on a record high in here with both the dollar weak and also on rising haven demand. The other thing is copper making a new all-time highs again in here this morning. If we go to just a very quick nod to the earnings calendar, we'll probably revisit this on Thursday or Wednesday and Thursday, but just a heads up from Wednesday though. But Nvidia is the standout, and that's the last of the Magnificent Seven that are going to be reporting this week. 5 things to start your day from Bloomberg. Bloomberg in here. So metal mania, both oil and copper, as we've already mentioned. Sorry, not oil. Sorry, excuse me. Gold and copper hitting new highs. That's given a bid to the miners in Europe, and particularly the FTSE 100 has got a bit of a heavy skew towards miners. So that went to a new record high in here. US stock futures nudging higher. One of the Wall Street bears in here, most prominent bears. Morgan Stanley, Michael Wilson and Morgan Stanley has now given up on his bearish view and now sees the S&P 500 rising 2% by June of next year. That seems still kind of quite conservative, but I guess he's flipping from a bearish view, which was that the benchmark would tumble 15% by the end of the year. So he's completely reversed on that anyhow. Ongoing inflation risk, and then they're highlighting here the UK data that we have coming out later today. It'll be worth keeping an eye on that. And then this is a technicality of going for settlement on stock indices. Stocks in here going from T+2 to T+1. So, I mean, it could be interesting. I mean, there could be a potential glitch in this, obviously, but we're going to go and see how that goes. But I mean, you've got to assume it's going to go. You can't trade expecting that it's going to go wrong. So that's just a technical development in the underlying stock market. You can see how dull it is. This is the main headline where I grabbed my head. This is the main, the homepage, the market's homepage, and they're leading with Asian stocks rise after you. And they never lead with something like this, So it just shows how little there is. It's basically just telling you what's happened. This is going into the US Open, and all they can say is Asian stocks have gone up. So very little going on across the. You look across there, gold on a record high. We've covered that. Oil still in a sideways kind of consolidation, slight upward bias. Copper, as we've said in here, goes above 11,000, all-time high on copper as well. So, and again in here, look, morning bid, buoyant start to Nvidia week. So again, Reuters on their homepage, their markets homepage, have nothing to say apart from what's going on. But that's kind of normal for a Monday. So on the overnights in here, we do see the Nikkei and the Hang Seng following the US kind of. We had a relatively firm close back on Friday. If we look at the UK, German and French indices this morning, we're up between the FTSE DAX and the CAC up 0.25 to 0.5% in here this morning, and US stock futures in here up about between 1/10 and 2/10 on the S&P and NASDAQ respectively. Underlying themes remain as we've got in here. So even though we've had this notable setback in here on the bond markets, after having a surge higher after CPI, had a notable setback, looking for those to turn back higher in here, so going to higher prices and lower yields to potentially be supported. But you notice though, since we had that, so we had the surge higher in bond prices, which were lower yields, that took stocks higher last week, and since then bonds have gone down and stocks have basically gone sideways since then, right? So what look, we've led with hits the snooze button, but risk stays bullish, right? So markets have gone very quiet, they've gone very sideways. We can see it here. They've gone so there's that impulsive move post the CPI data, and then the market's just marking time and having hit new all-time highs. This is the ES and the NASDAQ, it's pretty much the same chart really in here. I'm gone, sprinting higher post CPI and then marking time going sideways. But I think that's a positive given what we're seeing in the bond market. And we go to the, where are we? ZM. So there's the 10-year note. So there's that sprint high. And look, the bond market has given up a lot of those higher prices. Remember, lower yields in here. And if we go and quickly reopen, I closed it down. Go and open up the 10-year note yield chart. So if you find it easier to think about it in yield terms, so we had that big sprint to lower yields, lower long-term interest rates after the CPI. And we've retraced quite a lot of it back in here. And what I think is really positive for the underlying theme for stocks is we've gone back to higher yields, which should be negative for stocks, but you haven't seen. So you've gone back in here, you've gone back to lower prices of bonds. So these have got a positive correlation. If you look in here, we've had this rally in here coming from the end of April up to higher bond prices, and we had that sprint high, and then we've retraced. So this last bit, we've had dislocation between bonds and stocks. So stocks have managed to, if we go back to stocks, have had the same rally in here. Okay, so we've had that same rally, and then we've had that sprint higher in here on stocks. Get the sprint higher. and then stocks have just gone sideways and now moving back higher, even with bonds going still pushing lower and looking a little bit vulnerable. Stocks stay buoyant. So if the bonds can even turn around and just nudge back slightly higher in price, lowering yields, we could see another sprint higher, and that could be green lighted quite easily today if we go back to the data calendar in here. So go back by any of these Fed speakers, any kind of slight shift, any kind of dovish notes in here from any Fed speakers, indicating CPI is going the right way. That could just be the green light for another sprint high. So I've got quite a bullish view. I think the market was a little bit reluctant. I think this sideways activity that we saw back here through the end of last week was just, we had this big move higher and the market wanted to catch its breath. Obviously, we made new all-time highs on US indices, but also European indices. I think the market's caught its breath. It's gone sideways. It's kind of like a flag pattern. If we go and look at the ES in here now, you've got these almost like two flag poles. You've got strong push higher. This is just an overnight. Then you've got another push higher. So market's boom, boom, up. And then this is kind of a big flag pattern for me. And all the risk is for then continuation. So you could see this kind of move again at some point going through this week. What could be the trigger? Well, you got Fed minutes and Nvidia. So I think we could be buoyant, breaking to the top side, going Monday through Tuesday. And then I think there's a real risk through Fed minutes and Nvidia. But Fed minutes shouldn't really tell us much, because remember, the Fed decision was pre the inflation data. So the Fed minutes are probably all going to be talking about but they'll probably, if they point to the data, and obviously the data since then has been positive, then we could get a little boost from the Fed minutes, but it's most likely to come from Nvidia. All right, guys, I'm going to wrap it up there. Relatively short one today, beginning the week. There's not much. It's a fairly light calendar week, but we do have, potential. I don't think the Fed minutes are going to be that big. Nvidia is going to be the big one for me, and I think it could just be off to the races again with another boost from the AI sector. All right, guys, have a good one. Take care, stay safe, and I'll be back with you tomorrow. Have a great trading day. I'll be back with you tomorrow for another bull versus bear webinar.